Hello viewers, this is Bhavna Mehra, and in the series of evolution of banks, I have brought this second video where we'll understand about the post-independence phase of banking, which is broadly known as the nationalization phase. And considering the economic planning, this second phase was the foundation for today's economic condition. During the pre-independence phase, the growth of Indian banking sector was very slow, and they were also experiencing intermittent failures between 1913 and 1948. At this phase, the banking regulatory authority was somewhat scattered also, though the company law was introduced in India way back in 1850, but it did not work to the banking companies. And even the Indian Companies Act, which was a profuse refurbishment of the earlier company law of 1850, was also not effective for our banking system. As the central banking authority, extensive powers were there in the hands of RBI, but due to the dominance of some of the private people, general public was not having trust on our banking system as well as on our banks. Moreover, the coverage of these banks was also questionable. It means they were only covering some of the urban areas, not the rural areas. So, the booming economy and especially our tumbling banking sector needed government control as well as massive transformation. In this scenario, in March 1949, a special legislation called the Banking Companies Act 1949, which was exclusively applicable to our banking system, was passed, and it was renamed as the Banking Regulation Act 1949 with March 1966 amendment. And the recent amendment in banking regulation took place in December 2020, wherein all the cooperative banks will brought under RBI, and RBI will also initiate the reconstruction or merging of banks scheme without even giving them a moratorium period. Moratorium means temporary suspension of the activities. Now coming back to nationalization, let us understand what does nationalization of banks mean. It is an act by which government takes control or ownership of banks which were earlier owned by private sector, usually by purchasing a majority stake, that is more than 50%. In simple words, nationalization is the process of transforming private asset into public assets by bringing them under the public ownership of a center or a state government. And usually government does that for the betterment of country only. Following India's independence on August 15, 1947, India's central bank, the RBI, was nationalized on 1st January 1949 under the Reserve Bank of India Transfer to Public Ownership Act 1948. This was an important move since the RBI would soon become the regulatory authority of the banking system in India. Indian banks at that time were owned by private people. So these private people were having dominance in the economy and needed to be strictly controlled. Thus, to break this monopoly, on 1st July 1955, the Imperial Bank was taken over by the government and renamed as the State Bank of India under the SBI Act 1955. And therefore became the first commercial bank to be nationalized, followed by its subsidiaries in 1959. Eventually, in this whole phenomenon, the emergence of public ownership had been witnessed. One of my entire video is based on SBI from its establishment till its current position. So watch that video. Link will be given in the description box. By the 1960s, the Indian banking sector had become significant to smoothen the growth of country's economy because it had emerged as a large employer. But consequently, it needed a huge transformation, and therefore a deliberate debate began on the nationalization of banking industry. Like in 1960s, as 1960s was a time of political turmoil accompanied by two consecutive droughts in 1965 and 66, which are popularly known as twin droughts. The 1966 drought drove India into a ship-to-mouth existence, and as a result, our GDP growth was negatively affected. And when we talk about inflation, then inflation had also reached to double digits. It had not stopped till here. Even the foreign exchange was also declining in year 1964-65. And these economic conditions led the government to devalue the rupee from 4.76 per USD to rupees 7.50 per USD in 1966. At that time, it was a serious concern. Moreover, there was monopoly of private banks. Bank credit was not appropriately reaching to priority sectors, especially agriculture, as in March 1967, only 2.1% of total credit reached to agriculture. And therefore, there was a need to extend affordable credit to all types of buyers instead of concentrating the circulation of money to small groups of people only. And more importantly, to reduce the disparity between the rural and urban areas by increasing the reach of the facilities. So, on 18 July 1969 at 8:30 p.m., Indira Gandhi, the then Prime Minister of India, announced a sudden decision of nationalization of 14 largest commercial banks with a deposit of rupees 50 crore and above with immediate effect. And in 1980, in her second tenure, she announced the second nationalization where 6 banks were nationalized having deposit of rupees 200 crore and above. Here is the list of total 20 banks nationalized in 1969 and 1980 respectively. Now you can pause the video for a while and can take a screenshot or can make your own notes with the help of this table. In the middle of it, on 2nd October 1975, Regional Rural Bank established with the purpose to serve primarily the rural India, with basic financial and banking services which are now serving in around 21,871 locations. And on 12 July 1982, India's specialized bank for agriculture, that is NABARD, National Bank for Agriculture and Rural Development, was established. But remember, both of these NABARD and various RRBs are not nationalized banks. Furthermore, in 1993, New Bank of India merged in PNB. Up till now, it was the only merger between nationalized banks and resulted in the reduction of the number of nationalized banks from 20 to 19. And currently, there are total 12 nationalized banks, including SBI in India, after the latest merger of banks on 1st April 2020. Wherein the 6 public sector undertaking banks merged into 4 entities. So far, this has been India's biggest consolidation exercise in banking. Here's a list of 12 nationalized banks of India after amalgamation in the descending order of their business size. Here, I am not covering the merger of subsidiary banks of SBI and Bharti Mahila Bank with SBI, as I will be covering that in my other video, so do watch that video. So, it is evident from the list that merger of Oriental Bank of Commerce and United Bank in Punjab National Bank makes it the second largest bank of India after SBI. Merger of Dena Bank and Vijaya Bank with Bank of Baroda has already put Bank of Baroda at 3rd position. The merger of Syndicate Bank with Canara Bank will create the 4th largest public sector bank, whereas Andhra Bank and Corporation Bank's merger with the Union Bank of India will create India's 5th largest public sector bank. Bank of India will remain in its 6th position, and the merger of Allahabad Bank with Indian Bank will create the 7th largest public sector bank. Bank of India and Central Bank of India will continue to operate as before. Indian Overseas Bank, UCO Bank, Bank of Maharashtra and Punjab and Sindh Bank, which have a strong regional focus, will continue as separate entities. Nationalization of banks have brought in tremendous reformation of financial and social structure. It was indeed a significant step in improving people's confidence in banking system. Although banking has become more viable, yet it needs a regular improvement and transformation to meet our economic and social needs. In fact, with the need of time, the refined standardization will certainly give us a strong position in international front. Now, that's it for this video, and I'm sure that your doubts related to nationalization of banks must have been cleared. But still, if there is any doubt, so you can write in the comment section. That will help me out to make another video. And finally, if you liked the video, then surely give a thumbs up and also share with your friends and all those people who can be benefited with this topic. Meanwhile, I'll bring for you a video on RBI, the Bankers Bank, wherein I'll focus on the role of Dr. B.R. Ambedkar in its formation. Also check the description box for the related videos. And do subscribe the channel for more research-based contents. We'll meet soon. Till then, maintain social distancing and stay safe. This is Bhavna Mehra signing off.